Hello traders, the title of the video is Mastering a Double Zigzag Pattern and Complex Wave. Alright, let's get started. Alright, so have you been waiting for videos, or an apology to traders? We are back again, okay? So we are slowing down a bit, but we will speed up very shortly, okay? Mastering double zigzag pattern complex way. All right. So if you are new to the topic of zigzag pattern, the zigzag pattern is what we call also ABC. So you will hear some alien way traders say ABC alien way pattern. They are referring to the zigzag pattern. The internal waves of the zigzag pattern is 1, 2, 3, 4, 5, all right, which is an impulse move, followed by 1, 2, 3. That 1, 2, 3 is correcting the first 1, 2, 3, 4, 5, or the first impulse move, followed by another 1, 2, 3, 4, 5. So internal waves of the zigzag pattern are 1, 2, 3, 4, 5, 1, 2, 3, 1, 2, 3, 4, 5. Very, very important. If you are new to the zigzag pattern, go to www.24Elliott Waves. Check out our webpage relating to the zigzag pattern. All right, digit 2, digit 4, Elliott Waves in plural.com. Check zigzag pattern. All right, I will be writing an article very shortly, and within the next few weeks, I'll be posting that article at 24elliottwave.com about the double zigzag pattern. The double zigzag pattern is also called double free. Free as a number 3, all right? So if you hear anybody talking about double free, all right, they are talking about the double zigzag. In fact, when we are saying free, remember this, generally speaking, when the alien wave experts are talking about free, generally speaking, we are talking about corrective waves. All right, corrective waves are represented by number 3. Impulse wave are represented by number 5. So a double free means double correction. But remember, whenever they use the word double free, they are talking about double zigzag. You may understand that it's a double correction, but when they use the word double free or double zigzag, it's the same thing. Or sometimes they may say the word triple free, that's a triple zigzag. Triple zigzag, triple free, double zigzag, double free. All right. Now, free, generally speaking, is referring to a corrective wave. When we use the word double free, triple free, now we are referring to the zigzag pattern. The zigzag pattern is also called, some traders like to call it ABC. I don't do that very often. If you hear me, I don't usually say ABC. I call it zigzag. Because there are more, when we are talking about ABC, we are talking about a price structure with a free component. That's ABC. So here it is. It goes down, it went up, it goes down. ABC. All right. Now, some traders, sometimes when they are talking about ABC, they are talking about double bottom chart pattern. You see, that's why I do not use ABC to refer to the zigzag pattern. So, you understand what is a zigzag pattern, all right? It's a corrective wave that is correcting a trending phase or an impulse wave. Anytime you hear the word correction or free, we are talking about correction. Now you ask the next question, what is it correcting? Okay, good. Well, very important. So I have on this chart here, some traders may disagree and say, George, this is not a double free. They may say to you that, George, this is a WSY wave. This is it. This is another pattern, WSY wave. The WSY wave is, we are talking again about two corrective waves that are connected by a trending phase that has failed that we call X. So a trending phase that has failed is a corrective wave to a certain degree because it is not an impulse wave. It may have the structure of an impulse wave, but we know that it's a trending phase that has failed. So in bracket, we can say it's a type of correction. I want you to understand this very carefully because I need to explain to you the theory a bit so you understand everything. So, wait until I post that article at 24 Elliott Wave, and I highly recommend to all Elliott Wave traders to go to that website and read that article that will be posted probably next 2 weeks, all right? So probably by the time you watch this video, check the date, all right? Probably I already posted them, all right? So what I say to traders, the double zigzag is an Elliott Wave pattern, is a complex Elliott Wave pattern that is formed of two zigzag patterns, and between the two zigzag patterns, we have a connector. Now, that's why I say to you, some traders may say it's a WSY wave. Don't bash those traders that are saying that. Okay? Nothing wrong. Because they are saying to you, WSY wave, you may say, oh, it's a double zigzag. Don't waste your time fighting those arguments because we are talking about corrective waves. Alright? What I say to traders is, the double zigzag, we have one zigzag that is formed, completed, done, and dusted. Alright? We've seen it, we recognize it, good. We say it's a corrective wave, it's a zigzag pattern. So today may say, oh, it's a W. All right, it's a corrective wave. We all agree on that. It's a pattern that is formed of two zigzag and a middle bit. Personally, I'm talking about me, George. I don't call it X when I'm talking about double zigzag. I like to call it free. So, are you with me? The connector between the two zigzag, in order to differentiate in my own mind from the WSY wave, we are just saying the same thing almost, all right? So, a connector, I like to call it free. So I say, two zigzags that are connected by a free. That's it, this is the free, 1, 2, 3. All right? So, the first zigzag is completed. Now we have a free connecting another zigzag pattern. 1, 2, 3 again. But remember at the beginning of this tutorial, I was telling you that free, generally speaking, refer to what? A correction. So that's what I'm saying to you. Don't get into this kind of a fight with other Elliott Wave traders trying to argue with something that is true because they are all talking about correction. Whether they are saying W or a zigzag or WSY wave or a double zigzag, don't fight that argument at all. Just smile because it's the same thing. One corrective wave is completed, zigzag. The middle bit, somebody is calling it X, call it. You recognize that the third one here, if it's completed zigzag, you say, all right, because it's a zigzag, two zigzag, I don't want to call this one X. I'll prefer you to call it a free. So two zigzags that are connected with a free. You understand? Now, the double zigzag is a prolonged correction. It's a complex correction. So a trending phase is completed at the end of the fifth Elliott wave. Then a correction has begun. No one knows which kind of corrective wave will come out. At the end of the correction, we see that it's a zigzag. I'm going to say something very important that I want you to understand that will help you to recognize very often the double zigzag pattern, or whether you are calling it double zigzag or WSY wave, okay? But there is a bit of difference. Very often, if the first one is a zigzag, all right, very often, not always, the first zigzag will bring the price to the moving average 200, especially on the monthly case here. 1, 2, 3, boom, down here. So people think that the correction has ended. Remember that when there was a trending fail and the price pulled back to the moving average 200, people say it's oversold. And the fundamental trader want to buy near the moving average 200. You see? But if the market environment is not good or there were other factors that will not allow a new trend, the trending fail may fail. That's why I say to you, don't fight those that are saying it's WSY wave when you are calling it free. So as the price started going up here, everybody thinks that it's a new trend, but it has failed. Now this move here is a frame. Some may say X, don't find that. You can see that this move 1, 2, 3, what is it doing? It's correction. Why is it correcting? It's correcting this move down, this one. The first leg here. So a trending first. Now the first zigzag is correcting that trending first. That's the first correction. We may say that's the first phase, P-H-A-S-E, the first section, the first segment of the correction. We don't know how long the correction will take. We're going one step at a time, yes or no? But when a corrective wave is finished, we are expecting an impulse wave until it's not an impulse wave or an impulse wave that has failed. That we may call it X or we may call it free. Alright? So this move, you can see 1, 2, 3 is correcting now this zigzag here. Okay. Now that you see that, you see zigzag followed by free or W followed by an X. Automatically, no, you are not a machine, you are not a robot, okay? You will expect, logically, you will expect another corrective wave. Can be any type of correction, but because you see first one zigzag and the second one free, you may be expecting another zigzag. So you may say, there is a high chance, it's not guaranteed, it's not certain, there's a high chance that the next correction may be a zigzag, because the first one was a zigzag followed by a free. The following correction has a high chance to be a zigzag. It does not have to. Somebody may say to you, definitely, it will be a zigzag. Say, George said to me that it does not have to. Alright? And you may say, George, who are you? I'm just George. Who are you, George? I'm George. Okay? You see now? So this is the zigzag. Understand that it's a complex correction. So a correction has started here. Everybody say, our correction is underway. Move price reach the movement 200. We say the correction has ended. Okay, we draw a line there. We're expecting a new trend in phase. But behold, the trend was not completed. So going one step at a time, people may say, first wave, second wave, we are now in the third wave. And now, where is the fourth? Where is the fifth? None of them are there. So it is a correction, X or free. First one zigzag has channel, the second one may be a zigzag. Not guaranteed though. Alright, so now here is shu. So another zigzag. Okay? The next thing that I want to understand is that when you have recognized a double zigzag, which is a complex correction, which is a prolonged correction, we thought the correction has ended here. Here, as an earlier way trader, we know that the correction is not finished. Once this common settler is broken, we know that there will be more correction. We can tell people, ordinary traders, that because of this correction followed by free, as long as we don't go above this high here, we can tell people that there's a high chance that if it goes below this trend line, we will have another correction. Why? Because we have a correction and a free or X. There's a high chance we may have another correction. As an earlier way trader, you should expect that. Alright? Now we have another move down, another correction. So this one, the first zigzag is correcting the trending first. That is the first section of the correction. The correction is not finished. The free in the middle is correcting what? This zigzag here. That of free is the second section of the correction. First section, this section of the correction. The trade is a second section. So the correction is being extended or prolonged. Now again, because we have free here, we can expect another correction. We can forecast that there will be another correction. 1, 2, 3. Why this one doing this move down 1, 2, 3 is correcting what? This free. Yeah, this one. It's correcting this free. This last zigzag is correcting this free. But remember this. Now we have the third part of the correction. First part, zigzag. Second part, free. Third part, another zigzag. Now we have two zigzags connected by with frame. We have a double zigzag. Remember this. When you see or you recognize a double zigzag, all right, or you call something a double zigzag, very, very important one. All right. I was saying that to keep this video short. 15 minutes. Are you still watching? Cool, thank you. Now, when we see a double zigzag, are you an investor? Do you like to buy and hold? All right, look for double zigzag. When you see a double zigzag, you want to perform Google Asset test. You want to do what we call fundamental analysis. Very, very important. Don't just go and buy and hold. Check the market environment, the S&P 500. Remember the trading triangle, the market first, the sector before the individual financial instrument that you are trading. So what is the general market, global market environment? The sector to which this stock belongs to, financial services. In 2012, the Federal Reserve was devaluing the dollar. A lot of money going into the stock market, yes or no? Okay, you see? So the market environment was changing favorably for the stock market. Now check the stock itself. So the market, the sector, and the individual financial instrument. We are talking about the Bank of New York, all right, Mellon Corporation. Am I speaking with my Texas accent today? All right. Okay, here it is. Okay? You must perform Google fundamental analysis when you see a double zigzag. You want to be curious. You want to check the management. You want to check the story. Why? Because a correction has been extended. Look, the correction has started when? Since 2000. We are now in 2012. How many years that? 12 years. Why we have 12 years of correction for a company like this? Before we can put our money on the table and invest in this company, does it make sense to do a bit of verification? It makes sense, yes or no? That's exactly what people have done here. And you can see that the second zigzag brought the price a little bit below the moving average, 200. This is normal because they tested here, there was no trend. And you come and retest it here, they say, now why don't we buy a little bit below it this time? All right? So this is the double zigzag. We can also talk about a triple zigzag. Okay, I'll be recording another video to avoid that the video is too long. I'll be recording another video when I'll be talking about the triple zigzag. It's a very, very extended correction when we have a first part of the correction, a zigzag, second part, a free. Okay, and the third part is another zigzag, and then we have another free again, followed by another zigzag. So we have three zigzag patterns connected by two free. Are you getting the message? All right, that has been extended for too long. That's why when you see the double zigzag, first double zigzag, you want to perform Google Asset test. If you notice that this company is not going to go very much and they're crashing under competition, you can expect that we may have another free, followed by another zigzag. But you just want to go one step at a time. A corrective wave is completed. What do we expect next? We usually expect an impulse wave. If the impulse wave has failed, we call it X, or you want to call it free. Now, if we see that, we see that there will be another correction. That correction is a zigzag. That correction is completed. What do we expect after corrective wave? We are expecting free. So we say 1, 2, 3, 4, 5, 1, 2, 3, 1, 2, 3, 4, 5, 1, 2, 3, 1, 2, 3, 4, 5. And then again, from the 1 to the 1, 2, 3, 4, 5, we say again, that's 1. Then we go again, 1, 2, 3. The trending 5 and the corrective 5. And the correction can be extended, and so on, and so on, and so on. And after recognizing the pattern, my friend, practically trading. Don't just admire your intelligence, all right? Draw a trend line, map out the chart. See a double zigzag, map out the chart, you see? So We don't want the video to be too long. I'll be coming back again to this double zigzag, and we go over it again and again, and I will show you practically how can we use the double zigzag. So sometimes may say, Joe, this is not a double zigzag. I'll come back again and we'll argue about everything. I'll give it to you now. A double zigzag is a complex area wave pattern that is representing an extended correction when two zigzag patterns are connected with a frame. Or some people may say X. Some people may say X, all right? Nothing wrong with that. So you see 1, 2, 3, 1, 2, 3, 4, 5, 1, 2, 3, 1, 2, 3, 4, 5. Impulse move, correction, impulse move, zigzag. You see 1, 2, 3, again 1, 2, 3, again here. This time, impulse move, correction, impulse move. All right. Now the first section of the zigzag will be 3 because it will be quite dynamic. You see this section here, how it runs fast now? Phew. Here, this one. Phew. That's how you are going to recognize the zigzag. Impulse A, B, C. All right. Have I said everything? A double zigzag, complex wave. A double zigzag is called double frame. All right. A frame, generally speaking, refers to a corrective wave. Everybody agrees? All right. A zigzag is also referred to sometimes by like ABC pattern. All right. A double zigzag is a prolonged correction. When a correction is extended for too long, we can have a triple tree. A triple tree is a triple zigzag connected with two frames. All right. Don't fight traders that are calling a double zigzag WXY wave. Don't fight them at all. Don't fight them at all. It's a waste of time. Don't fight them because you are almost saying the same thing. When a double zigzag is completed, be sure to perform fundamental analysis. Combine the technical analysis with the fundamental. Map out your chart. I'll be coming back to that. Use the pitchfork tool. All right, very, very important. All right, use pitchfork tool. Map out your chart so you may make excellent trading decision. All right. Okay. The double zigzag is a rare pattern. R-A-R-E. You see very frequently. So they are complex corrective that you don't see very often. You are likely to see the double zigzag even on the 4-hour time frame. Check it out. You see sometime on the 4-hour time frame, especially if you are day trading. You may see a double zigzag on the 4-hour time frame. You may see on a weekly chart, all right, monthly chart, all right, even a quarterly chart. If you see on a quarterly chart, breathe in, breathe out, and do your due diligence before you start investing like the hedge fund. So quarterly chart, weekly chart, monthly chart, 4-hour time frame, all right? Even on a 15-minute time frame, sometime you'll see it. Okay, the double zigzag pattern. If you have any question, suggestion, lament, blah, 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 be sure to put in the comment section. And in due course, I will be recording another video to answer your specific question. Subscribe to our YouTube channel, 24 Elliott Wave, DG2, DG4, Elliott Waves in plural. And be sure to click on the notification bell so anytime we record a new video, you will be the first person to be notified. Until the next time, enjoy yourself and be very happy. We are the TFTW24 traders talking about mastering double zigzag pattern and complex wave. If this video has been useful to you, please give us the thumbs up. If you dislike it, be sure to mark it down. If you think, Joy, for the first time in your life, you are speaking with your real Texas accent, I'm very impressed. Be sure to share with your friends on Tumblr, Facebook, and Twitter. Happy trading to you all, and I will speak to you soon. Have I said I will keep it short? All right, 24 minutes, very, very short tutorial. All right, thank you for watching.